Good afternoon, ladies and gentlemen. Welcome. I am the Crypto Crow, and we are going to be covering a lot of stuff in this video. This is going to be something you're not going to want to miss. You're definitely going to want to stick around and pay attention. I've got a series of slides and things that I'm going to show because there's this narrative that's been established by some folks, primarily, I think, Benjamin Cowen, who I actually love. I love what he does. But Benjamin is somebody who I'm pretty sure he's like a PhD mathematician, very, very bright guy. I've met him in person. He's super cool dude. I was someone who was kind of blowing him up back when he had like a few thousand subscribers on YouTube. Like he wasn't big at all, but I really respected what he did, and I tried to do what I could to help him, kind of give him some pointers on YouTube, featured him a lot on my channel, and now lo and behold, he's just exploded. Not because of me. I was just kind of trying to, the same way I try to do with like Trade Travel Chill and just other people that I experience and I encounter over the years. I try to do what I can with my limited power here on YouTube, and I just try to give them a boost. And, I really, really appreciate Benjamin Cowen. So I want to make that point abundantly clear before I dive into this. But I also believe that he takes into account less what's going on in the world and more what's happening on the charts. I think he analyzes specifically the data that he has readily available in front of him, and that is what he bases his projections on. And he's also very humble about it in the sense that he doesn't say anything as though it's gospel. He just basically says, listen, this is what I see. This is how I think things could be playing out, and take it or leave it. Now, this video is very much going to be about leaving it, and I'm going to explain why. And I don't mean that in a nasty sense at all. But I do believe that the quantitative easing narrative for the 2025 market is going to be a moot point. And I'm going to break down a lot of stuff. I'm going to show you a lot of things. So, the very idea. So first, we're going to go to this first slide here that I just fleshed out. Why quantitative easing won't matter in 2025. Now, this kind of explains what quantitative. We're just going to say QE, so I don't get tongue-tied constantly. But QE is a monetary policy tool used by central banks, most notably the U.S. Federal Reserve, to inject liquidity into the economy by purchasing large quantities of government bonds or other securities. This process effectively increases the money supply. And now we're going to look at the QE history. This is the history of quantitative easing as far back as November of 2008. And you can see here that, basically right when Bitcoin was created, effectively, a year before up to a year after, we had a quantitative easing series. Then QE2 was November 2010 to June 2011. And then we had what was called Operation Twist, which is basically kind of a form of extended QE, as I understand it, between September 2011 and December 2012. And this was probably had something to do with, I'm not 100% sure. I don't even want to speculate on that. But QE3 was September 2012 to 2014. So it was like we kind of started something here, and then we officially went into QE3 in September 2012. Then we had what was called a balance sheet normalization. That was over a 5-year period, okay? And then we went into the pandemic of 2020, which sparked a QE response that lasted 2 years. So from March 2020 to March 2022. Now, when we want to look a little bit deeper, this is a screenshot. I didn't have to use a screenshot for this. As a matter of fact, I might just go ahead and pull up my chart to start sharing this. Where is it? Let me find this. Is this it? Not 100% sure. This is a daily. No, this is a different chart. Sorry, folks. I'm live. That's what happens when I go live sometimes. I don't have everything situated perfectly. Okay, maybe that was it, but I put it in a different window, so we're not going to worry about it. Oh, there it is. I actually had it laid out. Now, this is, if we want to basically show this on a weekly chart, we have all these different, I didn't start at the very beginning, but basically starting with QE Operation Twist. Now, the narrative is that when quantitative easing kicks in, we start getting a lot of money that basically sends the market up, right? And to an extent, I'm not 100% sure that this isn't coincidence over a result of QE. Now, what I mean by that is if you look at QE Operation Twist, it started as the market was going down. It continued to go down, but then it did start to move up and it continued, but it continued long past the market peaked, okay? And then what we had was this balance sheet normalization, which basically lasted the entire market cycle. So it wasn't necessarily QE kicked in and changed the world. This basically was a situation that ultimately engulfed the 2017 market from before the bottom, after the bottom, heading into the market and into the bottom. So this to me doesn't really say that, you know, QE or any of that stuff was playing a significant role. But then here in this market cycle, we had what was effectively like the pandemic response, right? We had this pandemic, we went into QE, and not only did the market not just shoot up that entire time, but it got broken into basically a two-peak cycle. So if quantitative easing effectively pumps money into the market, creating these new all-time highs, these parabolic runs, and we're getting these kinds of situations market to market, why does it seem that they don't necessarily play into major runs instantly? This was over the course of several years, okay? So why is the effect not as dramatic as you might expect? Now, here we are in the 2025 market cycle, and we're basically told, if we watch enough YouTube, that quantitative easing is what we're waiting for. It's the end-all, be-all. We have to have this quantitative easing to coincide with the other relevant narratives associated with crypto. But we're not going to get quantitative easing. So then the question is well, if we're not going to get QE that's going to push the market up, or that's not a narrative relative to pushing the market up, because quite frankly, a part of me wonders, yes, maybe a part of it does help because you have more money, more liquidity entering the market to make these moves. But ultimately, I don't think it's a narrative that's necessary. So before I dive real deep into that, I want to basically touch on Legacy Network. They're a sponsor of my channel. I don't know how many of you folks have downloaded the app, but we're about to get deep into why I believe that this market cycle is not about QE with a lot of receipts. But in the meantime, I want you guys to check out legacynetwork.io. There's a link in the description below. Please click it, check it out, download this app because I think this could really help a lot of people. And this isn't like a Degen play. This isn't, buy the token, it's going to go to the moon. This is something with real use case that I think will benefit a lot of people. Level up your relationships, career, health, and skills with Legacy Academy's fun, gamified learning. This is basically like a series of courses that can help you with your career, your health, you name it. Basically anything that you're trying to work on or improve in your life, and it's gamified using the token to basically get you other benefits and things associated with the app. And they've been a good sponsor to me. They've been and the app is actually pretty slick if you check it out. I'm curious in chat, how many of you guys have downloaded the app and are using it for different things yet? I'd really love to know in chat if you guys don't mind letting me know, because I'm curious if you're not or you haven't, what stopped you from checking it out? Because I think this could be really helpful. I think this could be beneficial to a lot of you guys out there. And there's a lot of free functionality to it. So I would suggest you check it out. And, if you're doing a course or two and you're thinking, you know what, I do want to go deeper, this is helpful. Then you can start going in and actually accumulating the token and using those tokens for the app and some of the added benefits and things. So make sure you check that out. Check out the reviews and the testimonials. And yeah, there you go. Now, before I dive further into this, I want you guys to understand that while quantitative easing can be beneficial and helpful, I believe that this market cycle is going to be very much unlike any market cycle we've had before. And I do not find it necessary that we have to have quantitative easing to take us into the next realm of where this market is going. And I'm going to show you now basically why I believe that way. And it should be abundantly clear by the time I'm done with this video that I think that narrative is going to be old news moving forward. I downloaded and played around a little bit, seen a shiny object, and ADHD kicked in and forgot. Okay. Everyone is a sponsor of Legacy, or maybe Legacy is a sponsor for everyone. I mean, they're trying to build this app up, so they must be growing. All right, let's take a look at this now. JP Morgan renames Onyx to Connexus. First question I have for you guys in chat is, how many of you guys even knew that JP Morgan was building Onyx? I've talked about it in passing on my video over the past, I don't know, year or so, but I may not have gone deep into it. But JP Morgan rebranded its blockchain platform, formerly Onyx, as Connexus, as the banking giant doubled down on real-world asset tokenization efforts. The bank will introduce on-chain foreign exchange capabilities as early as the first quarter of 2025, with plans for automated, around-the-clock, multi-currency settlements. This is JP Morgan, one of the big badass, chads of the finance world, rebranding their asset platform, and this is primarily all about the exchange of real world assets. They are preparing, and settlements for this is basically going to be like a crypto exchange. It's going to be basically round the clock. That's the first thing that's brought to mind. Now, I forgot about this. This is the CME futures. Now, for those of you new to crypto, you probably hear the term, but you don't really understand exactly what it is. But effectively, this happened right about the peak of the 2017 market cycle. And all of the politicians and a lot of these people were basically patting themselves on the back, basically talking about, look at how we tamed Bitcoin. Because once this launched, Bitcoin's price came down, and that basically started the bear market. I believe it was just the cycle, personally, and maybe they did tame it a little bit, the same way it's basically being tamed now. CME futures launched in 2017, which not only legitimized Bitcoin as an institutional asset, but also opened the Bitcoin market to institutional investment vehicles that we're getting now, such as the spot ETFs and the like, the electronically traded funds. This also plays a role in taking some of the volatility out of Bitcoin through shorts and long trading. Now, basically what this effectively means is that because of the CME futures paving the way and establishing kind of an institutional outlet for a lot of that liquidity and a lot of that money, they can effectively start playing the market by saying, hey, we can go long, we can go short, we can do all of this stuff as institutional plays, not just retail markets on these leverage exchange platforms. So that plays a big role in why I believe we don't get the extreme volatility of Bitcoin's price, because there's always pressure from both sides of that market kind of reining things in. In the early days of Bitcoin, we didn't have a lot of that, right? Not that I was even a part of it, but if you look at history, you didn't have a lot of that volatility outside of, at the time, I think it was more based on what's the word I'm looking for? Commitment, belief in what was coming, that sort of thing. Like the overall sentiment. I believe a lot of Bitcoin was sentiment traded. And so that's what I believe happened early on. And then you had CME futures come into the market, legitimize it, tame it a bit, and basically lower the amount of volatility found in the Bitcoin space and effectively the rest of the market. Because basically Bitcoin rises first, Typically, there's this, and then there's always a period where Bitcoin profitability starts flowing into the altcoin market. It's basically called capital rotation. They take it out of their Bitcoin and they put it into the altcoin market, and they magnify their profitability significantly before the market really peaks. Okay, now this real world asset narrative is going to continue getting bigger and bigger and bigger. And there are a lot of different reference points I could show in this video, but I'm not going to do that. We don't have enough time, and I don't want this video to be exceedingly long. But now, February of 2024, we have the golden age of crypto assets. Recent news related to that: 3 stablecoin bills have been proposed in recent weeks, 2 from Republicans and 1 from Democrats. A vote on changing DeFi tax rules could be the first crypto bill to be voted on this year. Trump's government has yet to nominate the new SEC and CFTC chairs. Now, if we want to go deeper and kind of look at what's happening in this market, let's pull this up. This week, a series of significant and historic hearings surrounding cryptocurrency and the U.S. economy are scheduled to take place. Debanking, Bitcoin, stablecoins, decentralized finance, and non-fungible tokens are set to be discussed and debated, officially kicking off proceedings for Donald Trump's pro-crypto agenda. The crypto ecosystem. Against the backdrop of Operation Choke Point 2.0 revelations, the Senate Banking Committee's newly created digital asset will begin the week's crypto-centric meetings with its first ever hearing on February 11th, which we saw. And it felt like a big nothing burger to everybody. But the reality is they basically announced how they were working on legislature, and that there was going to be a lot of legislature out within the first 100 days of the administration. Well, this happened basically very soon. It happened very quick. So we effectively have, about 3 months, three or so months. I'm expecting a lot of this stuff to start really hitting and coming out prior to May, which I think is going to really push the May market to the moon. There are a lot of other things related to May, of course, that I'm going to talk about in a moment. But a golden age of digital assets charting a path forward. The hearing will explore existing crypto and blockchain use cases. So that's what the hearing was that we saw. Now, the stablecoin Transparency and Accountability for a Better Economy, or STABLE Act of 2024, looks to establish clear and quality frameworks for stablecoin payments. It follows closely behind the Genius stablecoin bill, which may receive mention at the hearing. Interestingly, there's a discussion draft regarding NFTs. The New Frontiers in Technology, also NFT Act, seeks to clarify that NFTs aren't investment contracts or security transactions. They've already basically stated that they're effectively collectibles. It also has requirements for the Government and Accountability Office to undertake a thorough year-long NFT study. Basically, this is what they are, this is what they do, this is what they can be used for, and this is very likely what they're going to be used for in the future, and this is how we need to set up regulation around it. That's what I think is coming. The Federal Reserve, taking place on Federal 11, Federal Reserve Jerome Powell scheduled to appear before the Senate Banking Committee, which he did. We watched this. Well, I did. With regards to crypto, Powell's softening stance on Bitcoin may be of interest to the crypto-friendly committee. After years of keeping crypto at arm's length, Powell has finally likened Bitcoin to gold. This is going to be a big deal as we get further into what I'm showing in this video. Flying in the face of debanking practices, he recently said that banks can perfectly serve crypto clients if they understand the risks. And of course, we'll support that. This also is huge. I believe that banks are going to transition out of the traditional banking markets, and they're ultimately going to focus primarily on becoming custody for people's real world assets that have been tokenized. But that's coming in another segment here. Powell will also be facing questions from the House Financial Services Committee on February 12th. And I watched some of that too. It was a kind of a nothing burger. Just a lot of the left screaming at him about, you better not buckle to Trump. Nonsense. Though crypto doesn't often come up in these hearings, stable coins and the subject of a Bitcoin strategic reserve may arise. Changes to the Fed's interest rate policies, which often send crypto markets in one direction or another, are presumed on hold until at least June of 2025. So that's just a part of what's happening, okay? Now, this is also what I want to take a look at. Bitcoin OTC desk balance is declining sharply. Could this constitute a key factor in this cycle? Institutional players, including hedge funds, governments, and large corporations, have traditionally used over-the-counter desks to acquire Bitcoin without impacting the market. In September 2021, the OTC desk balance was around 480,000 Bitcoin, and today it sits at just 146,000 Bitcoin left. This decline has persisted even after Bitcoin reached $100,000, reflecting sustained, strong demand. Okay, now we're going to look at some of this. This is Bitcoin sell-side liquidity in the market, and this is the over-the-counter balance 30-day change. Now look at this. This is where it was in just September or 2021, September of 2021 or September 25th. Over-the-counter balance was 490,000, almost 491,000 Bitcoin. Today, it's sitting at 140,000, 141,000 Bitcoin. So from almost, you could say almost 500,000 down to a quarter of that, almost losing 100,000 Bitcoin a year. So you're talking about a 4-year cycle. Here's your 4-year cycle. By 2030, there will be no more Bitcoin on exchanges. That's what I'm guessing. Now, before we go deeper, what does this mean? So let's just assume for a minute that 100,000 Bitcoin a year basically gets pulled out of liquidity. Like you're not able to get it over the counter anymore. Well, think of all of the narratives associated with what's happening right now in crypto. There is going to be a mad dash for a lot of the primary cryptocurrency proponents of the system leading into the 2030 market. And I do believe that a lot of that is going to be established this year. I believe that it doesn't matter what price people get into over the course of this year. It is going to basically set the tone for what's coming by 2030. There are a lot of other narratives associated with 2030 that I think are a really big deal. Okay. But we're not even going to get into a lot of that stuff just yet because some of it is going to sound a little tinfoil hattish and all of that. But what we're seeing right now is it doesn't really matter what side politically you're on. We're effectively marching towards the same direction. I think the only real variables are who is going to profit from the direction we're heading based on who's in office at the time. Okay. I believe, especially based off of everything we're seeing right now, that, you know, if one side's in office, well, the people pushing the show are the ones that profit while everyone else takes a hit. And if this other group is in office as we're heading down that lane, then the people are more empowered and basically set up to basically, you know, change their lives quite a bit during that transition. The transition being the tokenization of real world assets, the traditional stock market, and basically everything else that we know, because we're heading into an era likely by 2030 where everything is 24/7 traded. Everything is tokenized. All of this stuff is going to happen. This is also why I believe that to some extent we may not get the significant crash, and I've said this now for a few years since the last market cycle, that we could end up in a period where the market doesn't crash 80% like it did like it has over previous historical cycles, that we get a less volatile, more consistent growth cycle. Some would call that a super cycle to an extent, but that basically becomes our future, and that it's more of a regulated, more of a consistent market where we might not see a big market crash for a decade. Okay. And that could very well have already begun. And then that's ultimately what I'm looking at here. Now, it's obvious, though, that over-the-counter volume, over-the-counter availability is dropping as the prices are rising. This is going to be pivotal in the transition that we're heading into, because these institutions, the hedge funds, all of the big whales, all of these people that are accumulating over the counter, they're not moving the price. Think about what the price of Bitcoin would be right now, and likely the rest of the market, if there were no major over-the-counter trades. All of this would be on exchanges moving the market up through slippage, through the order books. They'd be walking the books all the way up. We'd already be much, much higher in price. But the institutions don't want to do that, because if they're buying $5 billion worth of Bitcoin, they don't want the price to go from $90,000 to $150,000 on them with one order, right? Over the counter allows them to accumulate while they're effectively able to manipulate the market on the front end that retail are dealing with. It's just another way that the whales can do their thing and accumulate at the expense of retail. But those days are numbered, and that's what this data is showing. Now, if we look at the new supply, well, the new supply that's coming into the space is also much more dramatically lower. It's very low, obviously cut in half, but effectively you can see the supply numbers changing over time. And, there are a lot of different things associated with mining and the inflow of Bitcoin supply that a lot of people don't account for. While we have the hard-coded halving every 4 years, what you don't see and what a lot of people don't really realize is that the hash rate typically doubles approximately every 6 months. And that hash rate effectively accounts for how much you're able to mine up over a period of time as well. So, and this is one of the things that got me out of Bitcoin mining, because I learned, if you can spend $100,000 on mining equipment and then you're mining up early on, and there's like a whole calculation to it, but effectively the Chinese companies that are effectively manufacturing mining equipment and then selling it to the market typically get that first 6 months of the most mining power relative to the hash rate and what's going on before they're even selling that equipment. And by the time you get your equipment, so you might put your pre-order in and then 3 months later you might start getting equipment out, but by the time all that's come out, the actual power of that mining equipment as it relates to the hashing rates, it's already outdated. And that's the thing. They're spending all this money building this equipment, but effectively it's almost like selling you a used car that's already been driven off the lot and used as a daily driver for 6 months before you're buying it at retail price. And it only gets worse from there. So that is a really big deal. Okay. And I don't think a lot of people, that's why I got out of Bitcoin mining and I just don't mine much anymore. Once I realized what the profitability actually is, it just becomes not worth it. You're better off spending $100,000 you were going to use to buy mining equipment and just buy Bitcoin, just buy Bitcoin, period. Just buy Bitcoin. That's it. Let everyone else deal with everything else. So anyway, but you can see that the supplies are diminishing across the board. The halvings are cutting the supply down. Demand is increasing significantly, and that demand is ultimately being bought up over the counter, basically increasing the buy pressure and everything else on the exchanges, which is going to continue pushing the price up. Now, tokenization of real world assets by 2030. United States, this is United States alone, real world assets span roughly $50 trillion in residential real estate, $20 to $25 trillion in commercial real estate, $40 to $50 trillion in U.S. equities, and over $45 trillion in bonds, easily surpassing $100 trillion in total value and dwarfing the crypto market's sub $2 trillion capitalization. What does that mean, folks? Well, that means that if just a fraction of all of these assets are tokenized, and Bitcoin is used as the store of value for these tokenized assets, along with stable coins, basically trading in and out of these things, almost like commodities, You're effectively able to turn the entire world into one giant commodity with trillions and trillions and trillions of dollars worth of market capitalization flowing in and out of Bitcoin. Well, that all sounds great, right? And the idea that Bitcoin is divisible by 100 million Satoshis means we're going to get to a point. I mean, we're already kind of there, but we're very much going to get to a point where we are going to start measuring every transaction in sats, not Bitcoin. Bitcoin is going to be the grand poobah name that very few people use in the future. I'm telling you now, this is coming. It's not going to be about Bitcoin anymore. The narrative is going to be about sats. And those sats are going to be what dictate how much you own of any individual asset or what you're doing to trade on it, as well as stable coins. Now, this is what I think is going to happen to drive the market up. Consolidation of Degen assets. We will begin consolidating capital out of the more degenerate assets or degenerative assets, including meme coins, NFTs as we know them, and failed or subpar, failed or otherwise bad for the space projects, yes, such as Solana and others. Capital will flow out of the massive assets and into the top assets of each category, with the rest flowing back into their parent chain assets. What do I mean by this? What I mean by this is, you know, we've got these layer ones out there that are basically built, pumped, dumped, manipulated to hell and back. They're basically just venture capital pet projects is the way I look at them. You know, they create these fake narratives. They spend a bunch of money on all of the paid ads and all the paid articles all over the internet. And a lot of the newcomers and the degens following their favorite YouTuber out there thinking, you know, this is going to be great. It's going to make me rich. And in some cases it works early on. But we're getting to a point now where, along with, let's just say, the Solana narrative, then you have the meme coin narrative, and we had the NFT narrative, right? Basically things that have effectively become collectibles. They're going to be classified, I'm sure, as collectibles at some point when some of this more clear regulatory structure starts to come out. But that's the NFTs that we know as we know them. The meme coins as we know them. Meme coins, I think effectively are just going to become collectibles. Now, let's just say there's 100,000. We know there are millions of meme coins out there right now. But and liquidity and market capital is distributed amongst all of them. And a lot of them are basically stem from these narratives and a lot of these automated bots creating these meme coins and then pumping them up and then crashing them, rug pulling, et cetera, et cetera. The majority of those are already dead. Okay. So this has already begun. This consolidation of degenerative assets has already begun happening. And I'm not calling NFTs necessarily degenerative or even some meme coins, but I believe that as we consolidate out of the shit, right? Think of it like a pyramid. The cream rises to the top. I think that transition out of the crap and into the more highly valued, long-term, proven, tested assets, I think that's where the capital is going to go. And I think that transition is going to help fuel the crypto market in 2025 and drive prices up of the assets that are deserving. Because people are learning. People are definitely learning across the board. We're seeing the numbers all over the place. Meme coin speculation, the degenerative plays of people running around trying to chase that dragon, hoping that the 1 in 100 meme coins that they basically risk their money into goes to the moon and makes them rich overnight. People are catching on. This is a controlled market, folks. This is all controlled. And if you look at the meme coin market on Solana and you look at who's profiting from all of these rug pulls, it's basically like a little cabal of the same people. And a lot of these same people are out there funding a lot of these fake paid narratives to keep you hooked, right? And I believe that that's effectively what it is. I always joke, and I'm like, Solana is like the cryptocurrency that you would go and you'd mess around with in a dark alley, right? It's like you almost need a dealer for it. Like, hey, what you holding? Hey, I got 50. All right, cool, bet. I got these 3 meme coins, man. They're gonna change your life. They're gonna make you feel so good. All right, bet. Here's my 50, and you go home, you feel so good for a minute, because man, and then it crashes, and then you're like back to reality, and now you're hung hungover, you feel like hell, and you need that fix again. So you're running out there for the next, you got to go back out there to that deal or that exchange, that platform, right? That's the way I look at Solana. And it doesn't matter that the whole thing is ran and driven by some kingpin who controls the world and all kinds of bad things are happening to people. You just need that dragon. You got to chase that dragon. And so that's basically the way I look at Solana. I think that's going away. I really think that that's going away because the narrative is now solidifying as something that is going to benefit the most real, decentralized, true to form blockchains that are meant to help distribute power across the globe. And that is why I believe we're going to see some significant changes, because Bitcoin is going to become the store of value for all of it. Divisible by 100 million Satoshis, Bitcoin will be the inevitable store of value for tokenized assets. This is what will drive the Bitcoin price to over 1 million each, likely by 2030, potentially 2035. But on top of that, top 10 decentralized layer 1 chain Cardano will become the smart contract layer for Bitcoin and other assets such as XRP as early as May of 2025. So what we're basically going to continue seeing is we're going to continue seeing this consolidation out of all of the shit coins, out of all of the crap that people have been speculating on, expecting this market to be like 2017 or even 2021, where you could throw your money at just about anything and it'll make you some profit. And that is true to a certain extent, but the narrative is now changing because now the institutions are at play and they're not going to let you degens fuck up their entire market system, because this is something that they are building slowly over time based off of what retail does and what their intentions are. And what their intentions are tokenizing the world for 24/7 trade. And so they're going to classify a lot of this stuff as some form of degen, like, you know, a collectible, right? And you're going to be able to play with your collectibles, but I do believe that there are going to be some form of regulations associated with them to kind of keep the market a little safer. And so how that changes, we're going to see. But when we're talking about real world use case blockchains that are decentralized and empowering the people, and I'm not saying Cardano's the only one, but I do believe that Cardano is the one that is, I mean, let's be real about it, man. Like, you know, peer reviewed across the board, everything that it's been doing to achieve where it's at right now. This is going to be the blockchain that effectively transitions Bitcoin and some of these other non-smart contract related projects that are going to have significant real world adoption across the globe. And it's going to basically become not only their smart contract layer, but through midnight will also become kind of, in the partner chain will become the privacy layer as well. And I know that there are a lot of partnerships in play right now with like Microsoft and you know, there are a lot of things that are kind of happening as it relates to Cardano and its power as a blockchain. And the thing of it is when you look at Cardano, and you look at everything that's been happening and some of its arguments, oh, it's so slow to develop. No, it's not slow to develop. It's been slow to cater to the whims of the markets that are basically trying to funnel money through use of more degenerative plays like NFTs and just all of these gimmicky little things that are creating narratives in the market space is something that generates profitability for everyone, right? And Cardano is built with these systems in play, with the capabilities in play, but they're not spending money as a decentralized blockchain trying to perpetuate these narratives for its own profitability. And I think that is effectively what's been frustrating for some people. It has been building and keeping its head down and its eye on the ball, building a decentralized system with a decentralized governance that will dictate a lot of these things based off of users and holders voting, not being dictated by one individual person with his own intent playing out at the expense of everyone else, right? This isn't just a cash grab play. This is changing the world with technology that the world will benefit from in a multitude of ways. And so that is ultimately what I think is going to be coming down the pipe for the crypto market in 2025. And I think we're going to start seeing, and now we'll reference this video in the future. We'll see how right I am. But effectively, I don't think that this is going to be about quantitative easing anymore. I think that there is going to be way too much institutional money continuing to pour in. I didn't even go over like the $480 billion that have already flooded in just from the spot ETFs. And we've got Cardano spot ETFs coming. We've got ETFs for a lot of these other assets that are probably coming. And I think that we're going to get spot ETFs, and those spot ETFs are likely going to dictate where a lot of the Degen capital that's been floating around for the last 2-3 years, people trying to, place their bets on these like crippled horses, expecting them to like run the entire race, but maybe they can only run a few feet and they give you a little profit and then they get shot. That's basically what I see is happening with all these rug pulls. But I think that these spot ETFs, as they get approved, are going to show everybody where the capital is going to start to flow into, and that transition of capital into these major assets that are actually doing something to change the world and benefit not only the retail space, but the institutional players as we transition into this real world asset narrative, not to mention AI, which is a totally different thing altogether. And we're going to start seeing a lot of the AI narrative start to play out in a lot of interesting ways, which is both scary and exciting at the same time. But does this video help put anything into perspective for everybody? Let me know in the chat if I've done a good video today, because I was really trying to kind of break down why I believe that Benjamin Cowen's quantitative easing narrative is likely not going to be a big deal in the 2025 cycle. Dave, you're late. 40 minutes in, and I'm about done. So, hopefully this video kind of helps put things into perspective for people. And, hey, I'm not sure what else to say. While I'm at it, make sure you check out the links in the description below. Those links are very, very important. And make sure you check out Legacy Network, legacynetwork.io. Check their stuff out. You've got the Legacy Academy. You've got the Legacy Token. Check it out. LGCT is now live, available at PancakeSwap, Bitmart, and MEXC. The token's really only going to benefit you probably if you're using the app and you get a lot of use out of the app. So, check it out and play with it. I really would love to see what kind of experiences you guys are having with the app, because I've played with it. It is great. It looks great. Yes, they're a sponsor, but these guys are really trying to build something useful for people, and I get a kick out of it. I actually do like the app, and I really do think you guys would benefit a lot if you checked it out. It's a gamified app. Could help change your life. I mean, I used the app for a few minutes when I first downloaded it, and I already learned something. And I was like, you know what? That's a really good point. So, yeah, that's it, folks. I just wanted to say, hey, don't start sweating this quantitative easing stuff, because we're probably not going to get it, and I really don't think it's going to matter. The power behind the narrative of real world assets, the tokenization of everything, all of this stuff, the crypto regulation, the pro-crypto administration, all of these things, that is our quantitative easing, because that alone is going to continue pulling more money from institutions in the retail market into the space. We don't need quantitative easing for that. It's just going to take a little bit of time. I think May is going to be an absolute significant month. I mean, here we are, we're February 13th. I would love to see Bitcoin start getting a rally for the month, but I don't know. My wife has been telling me that my March is going to be like one of the best months ever, and I'm like, why? And now she's all into astrology and all of that, and she basically said that my February probably wasn't going to be that great, but my March was going to be insane, and it was going to set the course of a whole new year and all this other stuff. And I'm like, all right, well, great. I'm waiting on it because I need something good to happen, because the market sure hasn't been that exciting lately. But hopefully, we'll see. Maybe a big run starts to take place, as we head into the second half of February. and and things just continue to get better from there. And I'm not worried at this point. And I'll tell you why I did this video before I sign off, because I was watching a lot of this stuff, and I was really thinking about, is quantitative easing? I was watching, Jerome Powell talk, and I was kind of looking at all of this stuff, and he's like, we're not going to have quantitative easing until likely interest rates get down to about 0%. And we're not lowering interest rates for quite a while, so don't get your hopes up. And I'm thinking, okay, so what does that mean for the crypto market? And that's why I went back and I looked at the history of quantitative easing and how it really affected the crypto market, and how does that play out according to what's happening today. We're in a totally different world here in just a couple months, folks. I don't think people realize that, because the second some of this crypto regulatory legislature and all this stuff really hits and gets signed, the gloves are off, people. All of the top chains are going to explode all over everybody's faces, and it's going to probably happen at a time when you didn't see it coming, because the institutions are going to know before you do. So all I'm telling everybody is prepare, be patient, crow your coins, and enjoy. I do believe that a world is coming, and some of us are prepared, some of us are not, but I'm not doubting what I'm seeing in the